Let's give you the markets update now. The rand still under pressure as the Johannesburg Stock Exchange gets debt ceiling jitters. Today, all eyes will be watching the Reserve Bank's Monetary Policy Committee to see what they will decide with South Africa's rates in what most analysts are agreeing is certainly going to be a hike. Chief Investment Officer and founder at Makwe Fund Managers is Makwe Masilela, joining me now to quickly dissect what is going on at the JSE. Mr. Masilela, thank you very much for your time. Let's begin with the sell-off of South Africa Inc. shares that are listed on the JSE, with no fewer than 48 stocks hitting a new 52-week lows since last Monday, not to mention the rand's slump. What's driving weakness there?
I think the global sentiment has been very negative because of what is happening with the talks when it comes to the debt ceiling in the U.S. and also the possible tension between the U.S. and China. But what is exacerbating our situation is that we've got our own problems, load shedding issues, policy uncertainty, and also we are worried what's going to be happening going forward, that will we get a recession or not. And also people are starting to factor in that there might be some political uncertainty for the next year's election. It might not be reflecting clearly now, but closer to that it will be very clear. So we just have our own issues back home here. That is why we see our local stocks being affected that badly, and that as well talks for the rand as well. And also commodity prices not doing that great. Remember, the rand itself is a commodity currency. So if people are worried about global growth, China not growing the way we thought it will grow, then definitely there won't be any demand when it comes to those commodities, and that continues to affect the likes of the rand. And also we've been seeing that the US dollar itself has been strengthening because there's been a huge increase when it comes to safe demand because of all these economic uncertainties, including geopolitical uncertainties. People rush to the likes of the US dollar.
Yeah. As mentioned earlier, all eyes are going to be fixated on the decision by the South African Reserve Bank on the rates this afternoon. Consumers, I think it's fair to say that we are anticipating a hike. As to how much, that is what we're going to have to wait and see. But also important, Bob Masilela, what should we be listening out for in terms of South Africa's economic outlook?
I think it's more about the outlook than the outlook. We are saying we expect that the U.S. might start to pause anytime soon. We expect that inflation itself, as you've seen yesterday, will continue to at least start going down. And for the fact that here in South Africa we expect a recession, and load shedding itself might do some of the job for the South African Reserve Bank. I mean, when the economy doesn't grow, probably that will take inflation down with it. So maybe the Reserve Bank doesn't have to worry much going forward. And we expect them to at least get to a point where they have to pause and start to see the effects of these cumulative interest rate hikes that they've been imposing on us.
Let's talk company news. Life Healthcare is posting or has posted its interim results and including a cash dividend there. How are their numbers looking?
Not looking too shabby. We've seen group revenue up 12.9%, all because of a strong demand when it comes to their hospital and complementary services. And the likes of Ireland, Northern Europe, UK and Italy doing that great. And if you look at this whole demand, it has managed to increase their occupancy. And as a result, when it comes to their operations, they managed to leverage that. Hence, when you look into the overall financial performance, which is EBITDA, managed to increase by almost 13.5%. And yes, headline earnings per share were down a mere 3.4%, all because they had to do some impairments when it comes to goodwill, and there has been some interest charge after they've settled that dispute they had with SARS when it comes to the VAT. And yeah, dividend per share up 13.3%.
Wonderful news for the shareholders there. All right, let's then conclude with Southern Sun posting its financial results for the year which ended on the 31st of March 2023. Talk us through their performance, but also importantly, what clues does it give us about the health of the sector?
It just shows that it's managed to pick up because look into their occupancy sitting at 51.5. You compare that with the full year 2020, then you can see that the guys managed to do well, given that occupancy now is 51.5 compared to the 59.3 that was recorded then. And it just talks to local and international travel picking up, and also some corporate activities. And all their regions managed to do well, except for the Sandton area, and that itself is reflecting two things: that corporate activities in that area have not yet picked up, and also that area you still have a lot of people who are having a hybrid work situation, working from home and sometimes from the office, so that's having an impact as well. And their basic headline profits per share, I mean, last time they recorded a loss of 8.2 cents, now they've recorded a profit of 52.5%, so that continues to do okay for them, and the guys managed to reduce their debt by another 1.3 billion, not too shabby.
Makwe Masilela is Chief Investment Officer at Makwe Fund Managers. Thank you very much for that markets update.